Happy Thursday to you from the floor of the CME here in Chicago. I'm Oliver Slope with iiTRADER and your grain market update. We're seeing some late afternoon strength here today, which is very constructive to see. We're pressing up against the recent highs at 343 that we saw earlier in the week. If we can get out above that, we think 347 is in the cards to round out the week. But in between 343 and 347, there is a boatload of technical resistance. The 50, 100-day moving average, a couple key retracement levels. So that's going to be a big one to try to get out above to round out the week. I don't suspect that'll happen, but maybe if we can close in the middle of that range to round out the week, that'll set us in a good spot for Monday's trade. Now, the soybeans, very interesting trade here. We've been locked in between the 100-day moving average, 994.5, and the 50-day moving average at 980. So we've been trading in between that, looking for either a breakout or a breakdown. One thing that's very pivotal here is seasonal play that we're looking at going back. Over the last 14 years, the July soybean contract has closed higher in between now and December 28th, with the average gain being about 44.5 cents. So that's not necessarily guaranteed to play out, but definitely something to keep on the radar as South America continues through their planting season and their crop progression. So we're looking at a potential buy here in the near term through the end of December. And lastly, I want to touch on the wheat. Wheat's kind of been dragged down quite a bit by the strength of the U.S. dollar, and we wouldn't be surprised to see that play out throughout the rest of today's session and tomorrow's session. Now, if the dollar does retreat off of these 13-year highs, I would suspect that offers good support to the grain markets and especially wheat. So that's what we're looking at to round out the week. That's what you should be looking at too. This has been Oliver Slope with iiTRADER from the floor of the CME.